Okay, everyone. So, numbers therapy episode 2. And so today we're talking about how do global markets affect NFTs. Of course, anybody we have coming on here, it means that they probably know something. And I'm just sitting here like everybody to try to get that out of them for us. And also with my popcorn as well. So just as a reminder real fast and a refresh, the purpose of numbers therapy is to talk through macro stuff and bring on and showcase our experts in here. And so the goals are, everyone so that everyone can understand how all of the big things fit together, make better decisions with NFTs and other investments using a balanced perspective, learn about or from some of our people in here, and learn about different areas and opportunities that exist out there as well and different ways of thinking. It's also worth noting for anybody who wasn't here last week, there are different levels in here. So it's important that everyone is along for the ride as we go through this. So therefore, we allow questions to be kind of sprayed within to make sure that people are following along, right? We want to make sure everybody as a group is along for the ride. But we also have people with existing knowledge in here as well, different skill levels. So we want to make sure that those people also can ask more technical questions if they want to. And then lastly, disclaimer and note, none of what you hear in here is financial advice. It's all opinions. So without further ado, when this dude comes on, we all kind of just listen. At least I listen. I get my popcorn. He's our local ETH prognosticator and one of a few, let's call it, euphoria balancers, for lack of a better description. He's also been known to show off his grilling skills, so bullish on his grilling skills as well, and his steak porn. His background comes from brands and supply chain and ops, and he's had some good background and experience with trading as well. So without further ado, let's welcome our dude Recca today.
Hey guys.
So, okay, Recca, let's start with just maybe a little bit of background and experience. Like what kinds of businesses, what's your business orientation, that kind of a thing. If you just want to give a bit of color there.
Oh, all right. So background is schooling background is accounting and economics. Spent most of my career in startups. So actually all my career is startups. I worked in accounting, finance, sales, IT. Currently, I'm in a sales role as a data scientist. So mainly analyzing data, macro data, and just pushing that. Been trading since about 2007. And got into crypto about in early 2017. So.
Recca, what was the catalyst behind you trading? Like, why did you start in 2007? What interested you about it? Like, where do you kind of start from?
Oh yeah, I always wanted to trade. 2007 was really when I got my first job, so had some money, threw it in the market, got burned as usually most people do when you first join the market. I used to follow a lot of fundamental analysis. If anyone doesn't know what that is, essentially you're reading about a company, seeing their cash flow, their profitability, etc., things like that. That used to be the case back in the day that a lot of people use, but the environment has changed. I personally believe that fundamentals still matter, but not as much because there is algorithms, supercomputers, insider trading. There's so much of that now is more of a momentum trade now. And even recently, in the past 3 years, it completely shattered a lot of notions of how the market should function. But as we see now, if any of you actually pay attention to the stock market, fundamentals are catching up. It's liquidity being taken out of the market. I'm surprised that like Ethereum is currently at a current price and not lower, but that's something else.
So that's a good segue. So you've always had this like healthy cynicism, right? Like I know I poke fun sometimes when you come in and I say like, oh, hey, it's the Grim Reaper, that kind of, and obviously that's a joke when I say that, but like where does the cynicism come from? Like like why do you tend to always have I know you always see like the picture of where things can go and like the technological advances and things like that, but then you always see like the balance side of it too, right? Like where where there may be some bearishness or where there's over exuberance, things like that. Where does that cynicism come from in your experience?
Honestly, for me, it mainly experiencing like bear markets. Like the recession in 2008 was brutal. Like it's really brutal. In the stock market, crypto wasn't around there. And then we had another bear market in the crypto space in 2018, which was also pretty brutal. And generally, I'm more a risk averse person. I'm like time in the market type guy. As long as you're in the market, you're like over time, you would do well. But also on the other side, is that a lot of the traditional methodology of investing, I don't agree with nowadays, which is like, oh, as long as you dollar cost average in the market, like you're gonna make money. Like, yeah, that did work. From what 2011 to now, I guess. Well, maybe last year, but not now. Um, and every time I hear that, it generally like someone is playing you essentially. Like people don't realize it. I know always in the NFT world, we're all like, yeah, we're all gonna make money, but in the end, it's still a zero sum game. Someone is winning, someone is losing. So it's dumping aside of losers and I seen where it happened where people are euphoric. They're like, oh, I made so much money, but it's all on paper. They need to sell and like as markets go down, they get this weird mentality that oh, I'm gonna keep holding it. It's got to go back up, and you got to realize a lot of what we're trading right now is extremely high risk assets. Like if I were to put it in a tier, is NFTs are probably at the highest risk out of everything. Like probably go NFTs, then it goes to probably crypto, and after crypto, probably stocks, and after stocks, probably property, and after that, probably like commodities like gold and stuff like that.
Yeah, we actually had Shaggy on for episode 1, so you know him, and he's on the other end of the spectrum, at least traditionally. That was
Yeah.
a fun contrast to be able to have there. By the way, I just want to call out real fast anybody who's listening right now. If you have questions, please drop them in the questions chat, and even if it's like a really simple question, even if it's something like what is DCAing or whatever, right? Whatever your question is, like I just want you to know like there's room for those questions here, and it's far more important that we catch them early so that you can understand and be able to follow along and then ask questions later. So please, if you have any questions, please feel free to cut in and drop them into the guest questions chat as well. So, okay. So before we start to get towards like the global situation and how you think of it and all those good things, I think one thing to maybe call out too that you were just talking about is, equities and stocks, which you trade, but also crypto. So how do you treat those two asset classes? How do you think about them a little bit? How do you think about equities? And then consequently, how do you think about like crypto, for instance?
Well, I trade differently, right? So in crypto, I do not trade on leverage. It is for peace of mind, is personally. Cause crypto is 24/7. Like, you would be insane if you're trading leverage trading. You won't sleep. Stock trading. Essentially for stock trading, I'm trying to time the market on a shorter time frame. This is very dangerous and very advanced. You can literally lose your shirt. Um, but when I'm trading stocks, it's more I'm reading a lot of news. I'm looking for events, whatever it is like a Fed meeting, whatever it is inflation number, whatever it is the Russia war, or the China lockdowns, or food shortage in China, or what are like labor shortages, like stuff like that. Like I always keep an eye on that, and it's very difficult to do. I have a group of investors that we all collaborate together, and that's how I trade that. I highly recommend whether it's crypto trading or stock, you find a good group of people to trade with because you can get stuck in like a hole, like you're stuck in an opinion, and you might miss the forest for the trees, as a lot of people say. So.
And so, I mean, something you pointed out, right, is the fact that obviously you said it's advanced strategy as it relates to stocks and in your trading there, of having a shorter time, tighter time horizon, and I guess utilizing leverage a little bit. But it seemed like what you said was also absolutely do not use leverage in crypto. And what's your thought process there? Like, why won't you use leverage in crypto? What makes you nervous about it? What's your thought process? Just so that we can connect the dot for everyone.
Oh, sure. So, what leverage in crypto? If you're using platform for leverage, usually like FTS or Binance or etc. There are weird trades, and it hasn't not covered by any type of insurance or any of that. And you could get weird wicks up and down, depending on the coin, and you could get stopped out. There might be some weird moves. And generally, 'cause I know a lot of whales, and they do liquidity hunts, which is when they see a large block of, let's say, longs or shorts, they will try to target that. Essentially, they will maybe place a large buy. They will see a low float on the stock, and then they spike it up, so you get liquidated. That actually happened on Ethereum and BTC back in July. Like for instance, Binance had like a little bug where it went up to like 50,000 and down at 20,000, and those people didn't get their money back. Just so you know, like they were like, "Oh, you're shit out of luck," essentially.
Okay, can you just walk through that a little bit more, right? Maybe explain when you're saying float, what float means, and just kind of walk through the example a little bit more.
Oh, sure, sure. Like when you're looking at actually either stock or crypto, a float is how much of a stock or a coin is trading on the market, right? So let's say there are, I don't know, like 1,000 coins in the market where we're at $1, right? So let's say they're ladder up to a certain price. Let's say to $5. So let's say the average buy to hit that $5 mark, it may be like, I don't know, like $10,000 or something like that, or $5,000. I mean, someone can push the price up with only like $5,000. Right? Generally, as a coin or stock is more stable or have like more shares, generally it's pretty much the higher the value of crypto or stock or the more shares on the market, it stabilizes it because the float is how much someone is willing to buy or sell of a particular asset, right? If we talk about in NFT terms, it'd be like how many is listed on the market, if that makes sense. So a lot of times, I actually see people do this in NFTs too. They see like, oh, a listing from $2 to, I don't know, 2 ETH to 3 ETH, or like 10 listing. Someone might buy up the floor of the 10, create momentum, people FOMO in, and then they sell, like they dump on them. Like similar concept, kind of. But it is very dangerous, and a lot of coins have insider traders, and it's a whale game. But you could do leverage on the major coins like Ethereum and BTC. I think that less as risky as the others, but I just don't do it.
Yeah. Okay. That's a great explanation. Thank you for kind of sharing that. Maybe just one other dot to connect here, just because it's so relevant too. I mean, where do you put Ape in that spectrum, basically? Of 'cause obviously an increasing market cap at this point, but more of a nascent token at this point. So, like, where do you put that in the spectrum? Just so I'm sure that's somewhat on people's minds in here as well.
Oh, sure, sure. So Ape is essentially the shiny apple attempt. So for comparisons, like we can look at it similar to Shiba Coin, right? Like let's just talk about Shiba Coin last year, where it went is ballistic, right? So essentially, it was a liquidity stock out on the market, right? A lot of novices and stuff like that, or not novices, I say, or more of a cult following. When you see something like is so strong against everything else, right? That's like a momentum trade there. That's just, oh, this is the only one that do well. They're releasing stuff. They're like news, blah blah blah, right? So everyone hops on it. I think that where Ape is right now. Is it sustainable? I don't know. They have great punch in my opinion. They keep releasing more and more stuff. But as I see it, it's more of a pyramid scheme. It's great if you're in. It probably got to go higher. But the nature of it, you still need the money to flow in, right? What ApeCoin, what, at like 6 billion market cap. I think fully diluted value probably like 20, 30 billion M cap or something like that. But again, that is due to the lower float, where like I haven't really looked at how much coins are out. I would assume less than like 20, 30%. And that's why you can move the price higher. Like,
Yeah.
so, but yeah, it's essentially like the Shiba coin today. So if you want to compare it to stocks, you can compare it to like Tesla or compare it to the Roku at the time or the Coinbase. A lot of those that is high risk assets that everyone talks about all over Twitter, over Instagram, over the news, etc. Um, yeah, like they reached like absurd highs, but still be careful because it's still a high risk asset. I don't know how this can last. Who knows? Or Ape could go 200 ETH, Ape could go $100. I don't know, but as you got to think about it is as it goes higher, it takes a lot more money to move it higher also. So I'm always a proponent of looking at the market cap of any asset because that dictates how much money needs to flow in to move it. And if we actually look at the NFT markets recently, really only the blue chips have been like I guess sustaining their volume, but overall volume in the NFT market like dropped off. And you see all the money is consolidating between like apes, zooties, whatever, moonbirds, whatever the shiny thing at the time is, and it's getting a lot harder too, in my opinion, of that you having gains. But and how long this lasts, who knows, right? Um, I have been saying the last 2 months. I think May is going to be a pretty brutal month, or the start of pretty brutal times. But NFC Martin been doing the opposite, right? So we see.
I think your analogy, by the way, to Tesla, I think is a good one. It resonates with me too because, I mean, Tesla historically, and I'll try to talk this through for everyone because I know we have different levels of equity experience or whatever else. But Tesla traditionally was trading at a very very big multiple, meaning people were expecting a lot more in the future from Tesla before Tesla was Tesla, for lack of a better description. And even still, they're expecting more from the future, and that's kind of priced in there. But they're both super powerful brands with huge followings, things like that. So I think your analogy to Tesla for Bored Apes is a really good one. Obviously, different investment type, but conceptually, I think it's a really good one. Okay, so let's shift over to the more macro stuff and the global stuff. Like I know we was orientation today. Everyone wanted to hear about. So okay, we got Russia, we got China. So can you generally tie for people, why do the global markets connect to NFT markets? Like why do global markets matter at all when we're trading our JPEGs in here and otherwise? Maybe from like a general sense first, if you can.
Oh yeah, for sure. Like its overall market, right, is like sentiment, right? If people seeing the market itself going down, people are less risk averse, right? They're like, oh, I should take profits, and that is human nature. Um, as like markets go down, people sell off, right? Like we saw in January to March, the panic, like crypto took a hit, stocks took a hit, and NFT health took a hit, right? That mini bear, whatever. And also money, right? We got to think about this too. Like even NFT stocks, whatever, is still a whale game. Like the majority of everyone holding up the floors of anything, of stock, crypto, NFT are is the whales. Like they're the one buying like hundreds of NFTs and holding it, right? Whether they hold it until forever, who knows? But these the crypto type of trader, I think is different. I don't think they're gonna get a margin call or anything like that. I don't think they're leveraged to that extent, but who knows? But the other thing is there are institutions that are buying crypto, right? And NFTs are tied to crypto. So if let's say the S&P drops like 10, 20, 30%, something like that, if crypto, ETH in specifically, should drop a lot harder because it is a high risk asset. And as ETH drops, your overall value in NFTs drops too. They're kind of a disconnect right now that a lot that I think it work in NFT favors, where you're two steps removed from actual, I guess, usable money, I guess you're saying, right? When someone see Ethereum drop like, I don't know, let's say $200, $300, they don't realize whatever NFT they drop, the whole drop in corresponding value, right? And there's this weird mentality too that where they're like, oh, if ETH goes down, and NFTs should go up because now ETH is cheaper, so the value of NFTs should go up in corresponding like up. And I've been hearing that a lot and seeing that a lot, but I'm always on the side of I thought we have a sustaining downtrend, and then both will drop in tandem. But right now, right, it's still euphoria, a combination of many factors, like low float. Yes, people seeing NFTs are strong, so they're like jumping to that, right? You're seeing people that kind of missed the boat a little bit, like trying to ride the tail end of it. How I see it, anyways.
Yeah, it's a little tricky too with that comment that you're making as well, right? Like when part of the market is trading on a dollar denominated basis, right? Which is how can I maximize my dollars? So I'm going to look at both NFTs and the price of ETH at the same time and make decisions. And then part of the market is operating in, I just want to stack ETH, right? It makes it a little bit tricky, to your point, to be able to figure out the move as a result, right? Because they have different views of the market, right? They're going to make different decisions based on how they're thinking about that. So it definitely makes it tricky. But let's take an example from front to back and kind of carry it through, right? So Russia, okay, Russia's has been invading Ukraine, and that's isolated to those two countries. Accounts closed down. Obviously, not the nicest situation, but why the heck does that matter for me or for anybody in here otherwise as it pertains to their NFTs? Can you just like walk through how that kind of connects to some extent and why that matters?
Oh, sure, sure. So Russia is actually one of the major producers of energy for Europe. Actually, I think they're in like 12% oil for Europe or something like that. So one of the major things I'm looking at for Russia right now is their refineries, essentially. If anyone doesn't know how oil refineries work, is once you shut them down, it takes a lot of effort, a lot of time to bring them back online. For example, when COVID happened to the U.S., they shut down a lot of oil refineries, like manufacturing, etc. Right. So if you guys look at it right now, our oil production, if we had like I don't know, I think 80% around there, 80% production, and that about 2 years after COVID like rebounded, right? They shut it down for a couple months, and they're only at 80% capacity right now, and that's why you see gasoline at like $6 a gallon, oil at over $100 a barrel. So now imagine that same impact in Europe. Europe will have an energy crisis, in my personal opinion. Like they're doing tariffs on Russia. Russia not backing down. Eventually, they're gonna hit capacity like limits on keeping their refineries open because no one buying it. They're gonna run out of storage, and what's gonna happen? They're gonna put a dent in energy essentially. And of course, you need energy to mine crypto, Ethereum, etc., like that. Also, energy is the basis of all cost of goods, right? Like if your gas prices go up, your cost of production go up, the price of everything will go up, essentially. Um, and other thing about that is once you shut down a refinery, it's not just the equipment is like maintenance, is the people, right? You gotta lay off people. It just takes a lot of time to start that up. And it, from what I read, is they cut like production by half now, I think. But I haven't looked at it recently, and I'm actually surprised they didn't just cut it even more now. But that's gonna affect all of Europe, and of course we're a global market, right? Whatever affects Europe, it's gonna affect like China and the U.S. Let's say your cost of production goes up, right? And well, now it's not profitable for a farmer to transport his grain or something like that, right? Like why would I grow something? Then you're gonna have a food shortage, and it kind of like a snowball effect. It rolls downhill. Right now, we're all on good terms, in my opinion, but people are still spending, but that is gonna hit one way or another, and it all lagging. Um, the effect of it you won't see until I don't know, maybe a year later. So
That's awesome. So, okay, so I wouldn't be doing my job if I just kept us in dark situations only and without giving
yeah,
some balance as well. So let's look at another global market real fast. Um, you and I have talked about China as well, right?
yeah.
And I know you think certainly there's like at least something positive going on in China, maybe not from a long-term perspective, but at least as it relates to markets and maybe our JPEG investments and things like that. So like, what do you see happening in China, and how do you think that connects to our investments or markets in general, that kind of a thing?
So China, interesting, right? They took the poison pill. Their markets are pretty crippled in comparison to ours, but they're actually dealing with other structural issues that I didn't really realize. So for instance, they're probably gonna have a food shortage too. Their docks are backed up pretty badly. That's probably gonna affect the U.S. What I'm seeing is they're most likely gonna try to inject a lot of money into their markets or support it. Um, Whether that happens or not, who really knows? But I think they're gonna do something similar to what the U.S. did, where they just pump money into the markets essentially and try to prop up companies. Um, I think they didn't realize how badly they punished their industries. I guess with all their the government go after like the tech companies and etc. And they're still taking COVID pretty seriously over there. They have some lockdowns in production sectors, but you can't really trust information coming out of China too. But if I were to bet, I would have some China stocks, but during recession, it's better to hold less stable companies. I guess Costco would be one, or Coca Cola, or like more established companies would be a better investment vehicle, or even well, I wouldn't do bonds right now because rates are going up, so that's pretty fine.
Yeah, that makes sense. So, I mean, just to call it out for a second, I mean, I think a lot of what Rick is saying is not dissimilar to what we heard from Shaggy to some extent, right? At least parts of it, in that there's a wider global market issue that exists. Some of it stemming from Russia, some of it stemming from post-COVID issues, a variety of things, basically, right? And And that is going to hit at some point, right? Like that's why the Fed is adjusting rates. That's why inflation is high, right? Like I should probably say it in the reverse, but like we know that's happening. And so at some point there's going to be an adjustment that happens, whether it's over time or whether it's a bit more, contained, let's call it. I mean, that's to be determined. But I did think what's also interesting about what you said is with studying the China situation and thinking that a stimmy is a possibility, a US 2021 situation to some extent is interesting. It's a big country that has obviously a lot of buying power. So it's interesting to hear that side too. Not that doesn't discredit the negative stuff or that we have to be mindful of as well, but it's interesting to hear that too.
Yeah.
So
let me spread light on that. So China is known for whenever they hit a lull in their economy, their tactic to prop it up is to spend a lot of money on infrastructure. So that's their playbook for the past multiple decades. It's like, oh, economy is slowing down, dump money into infrastructure.
what can you tease that out a little more? Like what kind of infrastructure specifically? Can you give some examples?
So like modernization, essentially, like building roads, building factories, like power grid technologies, stuff like that. So, I think they hit a threshold of how much they can do that right now. So that's something to look at too. Versus versus how the U.S. is doing it, right? We have a crumbling infrastructure in the U.S. And as it breaks down, we actually lose GDP, which is gross domestic product, which is how much value we're producing in the world, essentially.
Okay, that's awesome. So we have some questions coming, but I see those guys. I'll come back to them in a little bit and make sure we have time for that, of course. Let's maybe transition over to the U.S. a little bit, Recca. So,
sure.
What's happening there? Like, what do you think is happening in the U.S.? Where is it going? How might it affect things? And what are maybe I'll say in like a balanced way as well. What are the possible outcomes, good, bad, or otherwise, as it goes from here? So I think that's I think what happens sometimes from what I see at least is like oftentimes people will read something and the narrative in their mind or otherwise might be that there's only this one route that exists, right? So read something about how rate hikes are happening and how inflation is high, we're all screwed, right? Or how there's money injected, we're going to be good. And it's just kind of binary. Mm-hmm. When in reality, there's outcomes that exist, right? With maybe probabilities. And so I think it's important for not just our NFT bags, but like just in general to account for the fact that there are outcomes that are possible and we can't predict the future, right? So with that in mind, like where's the US now? And what do you think the possible routes or outcomes are from here in terms of what happens?
All right. So I hate to be negative, but we're gonna go in a recession. There is no doubts about it in my mind. And I do a variety of factors, right? We should have been in a recession years ago, like in 2018, essentially, on the first dip, whatever. And the markets are at a state, a variety of things, right? So initially, it started with the tax cuts for corporations, and this are buying back of their own stock. So that propped up the market, knocked it around some more. And then we had the whole COVID thing, right? Which I thought would be the correction in the market, but I didn't expect the federal government to double their balance sheet in 2 years. But that's another thing. But generally, first off, you got to realize that the stock market isn't Main Street. That's very important to think about. And the market can be irrational for far longer than you can be solvent. That's a running saying. And also, like 90% of the stock market isn't owned, like the people that invest in the stock market are like literally the top 10% of people. So over 90%, I think over 90% don't have money in the game, essentially. It's like a playground for the wealthy, if you want to think about it that way. What's gonna happen in the upcoming year or months and year is we're gonna have what you call quantitative tightening, which is reduction of the balance sheet. Essentially, you're taking money out of the market. During COVID, we literally shoved I think about $10 trillion into the market, and that what propped up all the stocks and high risk assets. That's liquidity, right? So that liquidity is gonna be taken out of the market. You already kind of see it with a lot of companies. They're taking money out of the stock market, out of crypto, etc., and literally buying like property. Like, that's usually the play because property is like anti-inflation. Like generally, if inflation go up, property values go up, rent go up, whatever. It's a finite asset. But let me more focus on what the Fed doing. They're gonna raise rates essentially, and do quantitative tightening at the same time. So what they're doing is they're making money harder to get to borrow, right? And then taking more money out of the market. So that's a double whammy. What you're probably gonna see is home prices correct down a little. I'm not sure how much, since like institutions are like 30% homes are being bought by institutions. But you're still gonna see the cost of everything still be high, and we're probably gonna reach a weird breaking point. Corporations missing earnings because which we actually had just seen with Netflix and Amazon and a couple other like large corporations, and the economy is going to slow down. That is how it works. Like, the Fed is not pumping more money in. Like, valuation will go back to normal levels, and we're gonna go through it's like a downturn. How long it lasts, I don't know. How steep it gotta go, no one can really know, right? The markets right now, if you actually look at it on a monthly view, it really looks like the dot-com bubble, honestly, which is a little scary. But there there is differences, right? We're a more complex economy, like less things are holding it up. Um, I don't know how leveraged we are in the markets. That's kind of more difficult to analyze. But I think generally, consumer spending is going to drop, and because consumer spending going to drop, is the markets will drop. And that's caused by inflation. Like people just can't spend more. Its cost of goods go up, right? Even though if you actually look at corporations like consumer product goods, which is like meat, like clothing, etc., all the company made record profits. So, but those times won't go on forever. That it's nature in the market.
I think the related question to maybe ask there is that, people are hearing, and they heard it from you, they heard it from Shaggy, right? And it's just not a surprise that like at some point, like, everyone knows that inflation exists. Like, it doesn't take much to go to the gas station and see in California $6 a gallon, and obviously less elsewhere, but still high. So everyone knows that exists to some extent. But like, I think the question to ask is like, okay, so this recession is happening. How will we eventually get out of that recession when, as it starts to happen, right? Like, what's the path out of it?
This stabilization, right? Of prices. Of that's hard to say, right? Essentially, the equalization, I guess you would say, of like how much it takes to live, okay, to
Yeah.
survive. As long as the bottom, like 90% can survive, that's what gonna hold up the market. So, as much as it's messed up to say, the bottom 90% that provide all the value in the economy. You can't have them suffering. But pretty much money flows up. And we're kind of seeing it now. People are working double jobs. Rent is just insanity right now. People are yes, rooming up. Yes, too much money is being is held at the top right now, and that, I guess you can call it trickle down economics, which I consider it a joke. But
Yeah.
that kind of issue, right? Like, I hate to talk about this stuff. I personally don't like Elon Musk, but look, he spent $53 trillion to buy Twitter, which is actually kind of funny. I'm gonna talk about that for a minute. Just so you know, if Tesla goes to $760 a share, Elon Musk get margin call on Twitter, which means he has to pay Twitter like $1 billion or something like that. So he cannot buy Twitter if Tesla goes below $760. So
which is not impossible, by the way, right?
yeah. What? If you look around, I think at like $830. Oh, $860. So if we drop under $100, which is not impossible, he cannot buy Twitter. Just so you know that.
So I think a question that's been asked in here that's probably worth connecting to as well on this topic is, OXFC asks, how much faith do you have? Do you two have? But I'll defer to you, and then I can type on afterwards. In the Fed being able to combat inflation in a controllable way. So, what's your thought on that, Recca?
Oh, I have no faith in them. They're they have no levers to pull now. They have to let it drop. I honestly think they should let it drop harder and just get it over with. But what they did the last 2 years kind of unprecedented in my opinion. And it kind of, I hate to bring politics in this, but it's kind of interesting. I'm really curious how they're doing this, because midterms are end of the year essentially. I don't know if they're gonna accelerate rate. I don't know which side they're on, but it's not a good look. There are pressures on the Fed to try to ease into it, but easing into rate hikes and quantitative tightening. I don't know. It is very complex. They have no out right now. How I'm looking at it, the market just has to fall. Like generally, you usually have levers like, oh, you can decrease interest rate, you can buy more bonds, you can do like fiscal policy, but they have nothing. So I really don't have my faith in them. But
yeah, so I mean, I guess I'll build on top of you, and then I mean, I have like maybe a not completely different, but like a slightly different opinion in the sense that I come from like pure supply and demand economics, and that's that, right? And so, raise rates cause people to save a little bit more and reduces demand for goods, and then it adjusts prices as a result, right? And I also, I think you can change the supply side too if you use more technology to be able to scale and reduce the cost of goods. You can also reduce prices there, but I think that one takes a little bit more time to get to that, probably. I'm probably understating that, but it probably takes time. I think it's going to solve, right? Like over time, it's going to correct. Like it has to correct, and that's what they can use at the end of the day. And so it's not going to be pretty. And I'm happy, Recca, that you brought up about the midterm elections thing, because I think that's an important thing to consider too, because many of us in here, talk about how much we don't like politics, and maybe some people like politics in here more or less or whatever else it is, but it doesn't matter what your perspective is on it, as much as the fact that from an investment standpoint, like we have to consider it, right? Like we have to know that exists.
So
go ahead.
Yeah, so I can give you a perfect example of this, of how politics affects the economy, right? So generally, if the economy is bad, you blame the guy at the top, which is right now the Democrats, right? If you follow anything in Texas, Greg Abbott stupidly instituted some rules on I guess like checking truckers or whatever over the border. Tea Party, everyone was against it. He did it as a show, and they rescinded it after like 2 weeks, I think. But in that 2 weeks, I think they lost like $7 billion worth of GDP, whatever. But yeah, stuff like that happens, right? And then also in Florida, you also see like the governor there attacking Disney, right? So that does play a role in the markets too. But that's me trading individual stocks. So like,
Yeah, I think it's just fair to like, again. I'm happy you said something because it's an input that we have to consider, right? And for
yep.
example, like if politics were not in the way right now, right, and politics were not a thing, which they are, and again, I'm not trying to be U.S. One other thing that's worth calling out: I don't want us always to be so U.S. centric, but the fact is that crypto is oftentimes tied to to the equity markets, the U.S. stock markets and equity. The biggest buyers of crypto are still the U.S. So just whether we like it or not, that more than other markets is what drives our markets, right? So it's not intended to be like biased or ethnocentric or anything like it. It's just it's fact and data to this point, and we have to kind of use that. But yeah, I'm happy you said something because if there were not politics involved, for instance, maybe they'd take a harder line on it, right, and just go for a quicker move, and get to where we need to get to faster in terms of inflation, and then go on from there. But that's not the case necessarily, and so that could factor into something like that.
It's always a factor, right? It's human nature.
Okay, so I guess I want to make sure we have time for some questions. I see a couple other questions in here, and then of course, if anybody else has questions, please drop them in. So, Salty Bay asks, after hearing you speak about Ukraine, Russia, and a bit about China and how these things affect markets, I guess more of like a technical or process question of how do you keep up with the news, any news source and recommendations? But I think the other question that I might ask too, relating to that, to build on your question, Salty Bay, is do you use some kind of like calendar approach to be able to put big events on the calendar in advance so that you can make a move before the FOMC meetings coming up or whatever else? Like how do you manage that?
Oh, there are a lot of things you use. If you're using any trading platform, they usually have like a calendar. You click on, for instance, like TradingView usually has a calendar, I believe. They tell you events, or you use like Yahoo Finance or TD Ameritrade. You generate those platform have calendars. You can follow a lot of Twitter people too, like Walter Bloomberg, pretty good follow. Yeah, a lot of news. There are signal channels like on Telegram. They're like Market Watch. Um, I do look at Bloomberg sometimes and Wall Street Journal, but a lot of those are very manipulative, so I don't really look at them too much. But um, generally, what I do is I have like a group of investors, and we bring it up. We just talk to each other. It's literally impossible for one person to consolidate all that information. It's too much. I highly recommend you get a group of people together. Like you're gonna forget. That is how it is. Another good Twitter follow is probably Earning Whispers. They're pretty good on like showing you what earnings are coming up, stuff like that. That's very important. Um, yeah, another one is you go with the FO's, like the Federal Bureau website. They usually have like events like CPI numbers, which is inflation number, consumer spending, saving, like housing, stuff like that. Yes, yes, the information is everywhere. So
So it's not a Salty's maybe not a perfect answer for you as much as I guess group plus one-time effort of calendarizing main events, that kind of a thing, and then between you calendaring it and then also having your group kind of gives you like a double check on making sure you don't miss something big in the market. That's what I'm taking away from it.
So yeah, you get analysis paralysis if you're staring at so much stuff. It what a more difficult thing to do to filter information.
So okay, Recca, this last question, I purposely saved this one to the end because I think it's a meatier and kind of a fun one to some extent. Not the easiest to necessarily answer, but what Koff asked earlier was, I hear the term decoupling often in relation to the crypto and stock market. I understand the concept behind it. Is it a buzzword, or do you expect it to happen sometime in the future? Any thoughts are appreciated. So maybe before you dive into whether you think decoupling is going to happen, or what would catalyze decoupling, or how you think about it, or however you want to approach it, maybe if you could just quickly define decoupling real fast, just to make sure everyone's on the same page, and then go into what your thoughts are and how you're approaching it.
Oh, all right. So decoupling is the separation of the stock market and the crypto market, essentially. Pretty much like right now, generally, crypto, which is BTC and ETH, move in tandem with the stock market. It's saying they've been around for a long time, where people were saying like, oh, like once the crypto market decouples from the traditional market, it's gonna be a new era where finance and technology and all that. I personally think a joke is a buzzword, is a meme. We're actually gonna be more in tandem with the markets as time goes on, as institutions get into crypto, which they are, and the markets are directly correlated. Like the whole decoupling nonsense, in my opinion, is that people believe that crypto is providing value, I guess. I personally think that crypto doesn't provide any value whatsoever. Like the tech does, the underlying tech does, but the coin itself doesn't. In my opinion, it is a method of like generating value. Is how I see it. Um, like if you like other things I've seen is that people were like, oh, once you have digital currency, or which another thing people say about decoupling, like you're in control of your own finance, like all other jazz. But there is too much friction in the crypto markets for that to be a reality. Right.
All right, let me do my best job, Recca, to balance you to some extent, at least. I wouldn't be doing my job to not balance it to some extent. But I mean, I agree with a good chunk of what you're saying. It's still a risk asset. It's still big institutions that over time are going to buy that kind of. I agree with all that. I think there's no doubt about it. I think the only one comment that I would build on top of it, of course, I agree that the technology is real, like all of us doing here, that kind of a thing. I think the one comment that I'd put on top of it that I think is noteworthy is, I don't think it's the same, and I think you'd agree with this. I don't think it's the same necessarily for all cryptos, right? In some cases, there's no business. There's complete business of having crypto or token, and in some cases, there's practically no business in having it. It's unnecessary. But I think more than that, in the cases that it is necessary, I think it could be used as a great, utility mechanism and or modern day incentivization system, right? Where it does provide value, and an equivalent does not exactly exist in Web2 land, right? So like, I guess the only note that I'd make is pulling apart the cases where a token is actually useful, necessary, and applied appropriately, versus the cases where it's just put in there because it's an easy way for the founding team to make money and have an exit event at some point and be really successful. How do you feel about that?
Yeah, right. Like crypto is great for funding. I have funding vehicle, in my opinion. Like if business want to get up and starting, it's pretty easy to get money. Like in my opinion, if you're semi-competent, a good vehicle to fund like projects, right? Like innovation. Yeah, I see it being used for that, right? But yeah, the general tech though, you don't need to place a value on the technology, I guess you say.
Yeah, that's awesome. So we have just a couple minutes left. I just want to see if anybody has any final questions. Please drop them in now. I'll just give it a minute or two to see if there's anything. And I don't see typing or anything. So if not, I think we're at a pretty good point to break right now. I mean, it's an awesome conversation, man. I always enjoy speaking to you and hearing your perspective. I mean, you have so much good thought and experience with this stuff. And then more than that, it allows me to every time retest my assumptions and my sanity. So, I don't take it for whatever it's worth, anybody on, like whenever Recca speaks, like, he's brilliant, of course, there's no doubt about it. But I don't take it and like all of a sudden I'm I leave and I panic sell necessarily. Like,
yeah, don't do that. Like,
that's not quite my approach.
I'm not doing that either. If you guys heard me earlier in like March, I said that March would go up mid-April.
Yeah.
So my methodology in all markets is I try to gather as much information as possible. I plan the trade and then I trade the plan. When you deviate from your plan is when you're emotional buying is what I'm saying. Like that a very, very dangerous mentality to get into. To try to always be level headed, right? Like the markets move up and down in the nature of the markets. Um, and when I talk about like macro levels, look at what the overall market is doing, right? If it doesn't make sense to you, like you see everything like either like looking good and you see the market down, maybe that's a time to buy, right? Or when the market is high and everything looks like shit, maybe that's a time to sell, right? Like it always take a step back and look. Is all I'm saying. And I'll always take profits too. Like it never hurt to take profit. You don't want to be the person where like, oh, I had like $1 million, but I held it, and now I have like 200K or something. That's a pretty awful feeling.
Yeah, I think it's a great point to kind of
Like,
to wrap on here. And we always talk about it anyway, right? Taking profits is a good thing. Always more projects, always more things, that kind of a thing. So I think it's awesome. I think if nothing else, hopefully everyone today got a wider view, and then maybe even like a balanced perspective on like what possible things could happen, or at least what things to consider so you can plan. Again, we're all lucky in being here in the situation and being able to make money, and some people are making more, and some people are making not as much, but still everyone's in a great position though, right? And so hopefully this can at least provide like a little bit more balance as you go forward, so that you can just manage your portfolio well, and everybody can be in a great situation moving forward. So ETH to 10K by 2033, probably, Godman. I think that sounds safe enough, but
yeah,
we'll see how that goes.
yeah, that could be a possibility unless they're quantum computing and then destroys our crypto. But that's something else.
Well, Recca, thanks so much for joining. Thanks for your thoughts as always. I'm sure everyone loved it. I appreciate even being in the same viewing position as everybody and being able to just hear what you have to think. So thanks as always, and really appreciate you, and see you in VC as always.
Yeah.